Welcome back. A high-stakes hearing on Capitol Hill tomorrow. The most powerful players in the tech industry, Mark Zuckerberg, Sundar Pichai, Tim Cook, Jeff Bezos, all set to testify before Congress tomorrow as part of an investigation into anti-competitive behaviors on their platforms. Joining us right now is the global head of technology investment strategy at Deutsche Bank, Apjit Walia. Apjit, it's great to see you. Thanks very much for joining us. And I love your report of July 15th called the $3.5 trillion tech Cold War fallout about China and the U.S. I want to get to that in a moment. But first, what are you expecting from this hearing, and what's the impact to these technology companies, Apjit?
Thanks, Ria. Great to be here. So the hearing, I think the most important part is you've got 4 CEOs coming together. That is fairly unprecedented. Not a lot of precedents. I guess the only one you can talk about is the mid-90s in the tobacco industry. All of them came together. I think this is an interesting time for tech. You've got a lot of privacy issues, a lot of anti-competitive practices. And of course, lawmakers are going to talk about how post-COVID, how this, the individual street is struggling, and big tech has not helped the small business. That's essentially the argument coming in. And I guess the CEOs will argue that they have to help small business, and innovation is something coming out of the U.S. And given what's going on with U.S.-China, big tech in the U.S. needs the help from the government and the potential scrutiny to get us out of this bottom and be able to be more competitive on the global platform.
So what's the story on earnings? We're just looking at Pfizer on the screen, beating earnings expectations with $11.80 billion versus $11.55 billion on revenue. The company reporting a beat. How are the earnings expected on Apple, Amazon, Facebook, Google? They're all reporting this Thursday. It's going to be a big day. Tell me what you're expecting. Let's go through some of these main earnings stories in tech.
Yes, I think earnings, in terms of there are several tailwinds. The most important tailwinds for tech right now is post-COVID work from home, the digitization. The world is still fairly under-digitized, so tech is riding that tailwind across the board from e-commerce names as well as hardware. I think when it comes to Facebook, there's some concerns that analysts talk about potentially some of the boycotts in July might hurt the numbers. For Amazon, the expectation is that if there's any dip, given the cloud adoption as well as e-commerce, any dip is going to be bought. My view is earnings are important right now, but the biggest drivers is liquidity, which finds its home in tech, and the second is the tail risk of U.S.-China, which is the elephant in the room, which as we get closer to the end of the year will become larger and larger.
Yeah, and I think this is a really important point, these tensions between the United States and China intensifying. You said in that note that I mentioned, a tech Cold War between the two countries could cost $3.5 trillion over the next 5 years. Is this largely because we're talking about two different standards in technology? There will be the U.S. standard and the China standard, Apjit?
Absolutely. There's 3 different ways we look at it. The first is the tech war we talk about, where the world gets divided into 2 halves, where the Chinese standard in 5G or PC handsets and the U.S. standard, and non-aligned countries asking companies to comply with both of them, which will increase costs. And the second one would be, if you have a complete decoupling, Chinese organic end demand, about 400 billion per year going offline to Western companies. And the last is the supply chain, which it's taken 40 years to build it in China for it to be the cluster of networks to move out of China to other parts of Asia or bring it back to the US. If you add them all together over a 5-year period, the cost of the sector would be $3.5 trillion. And we're talking about happening if there's a complete decoupling between US and China.
Wow, that's important because it looks like people are not working that into their models in the next 5 years. John Hilsenrath, jump in.
Yeah, Gene, one question on these hearings and the debate in Washington about big tech. We have this dichotomy where on the one hand, a lot of people are worried about the monopolistic power of the biggest tech companies and how they use that power. On the other hand, these tech companies are driving the stock market. So if Washington cracks down on big tech companies, if it breaks them up or restricts them from growing, is it going to be killing the goose that laid the golden egg? Is it going to be undermining the stock market rally that's bringing investors back after this hit they've taken from the coronavirus?
Yes, definitely. Any kind, it's the curse. It's the curse of being over successful. The way I think people look at it is, if you come out to big tech right now, given it's such an important part of the recovery, such an important part of the global economy, it would not be the ideal time. The timing is not appropriate given what's happened post-COVID and the fact that we've got this global geopolitical issue going on in the U.S.-China. U.S. tech needs all the help it can get at this point.
Apjit, real quick, would you buy any of these stocks after this huge move up in so many of them?
My view is tech long-term remains obviously a big tailwind because of liquidity. I think between now and November, some of the cyclicals, we looked at semiconductors in our report, potentially have some risk because of US-China.
All right, we'll leave it there. Apjit, Walia, great to see you this morning. Thanks very much.